In New York, the TD Bank has agreed to pay a hefty $3 billion fine to settle allegations of failing to properly monitor money laundering activities. It's linked to drug cartels, according to a statement from regulators on Thursday. This settlement includes a $1.3 billion penalty payable to the U.S. Treasury Department's Financial Crimes Enforcement Network, or FinCEN. This makes it the largest fine ever imposed on a bank for such offenses. Additionally, TD will pay $1.8 billion to the U.S. Justice Department as part of a plea deal to resolve claims that the bank violated the Bank Secrecy Act by facilitating money laundering. The U.S. Department of Justice stated that TD Bank had long-term, pervasive, and systemic deficiencies in its transaction monitoring processes. The Wall Street Journal first reported the news late Wednesday. At a Thursday press conference, Attorney General Merrick Garland said, by making its services convenient for criminals, it itself had become one. From January 2018 to April 2024, over 90% of transactions at TD Bank went unmonitored, allowing 3 money laundering networks to funnel more than $670 million through TD accounts, according to legal documents. These systemic failures resulted in real harm to American citizens and communities, said Deputy Treasury Secretary Wally Adeyemo. TD Bank prioritized growth and profit over compliance with the law, enabling drug trafficking. One instance involved TD employees receiving more than $57,000 worth of gift cards to process $470 million in cash deposits for a money laundering network without reporting them, the Department of Justice revealed. The Office of the Comptroller of the Currency, a U.S. banking regulator, added that TD handled hundreds of millions of dollars in transactions that displayed clear signs of suspicious activity. This is a difficult chapter in our bank's history, said TD Bank CEO Bharat Masrani in a statement. These failures occurred under my leadership, and I apologize to all stakeholders. Masrani added that TD Bank is fully committed to strengthening its anti-money laundering efforts. The bank has hired over 700 new specialists with expertise in financial crimes and implemented improved processes to prevent and detect illegal activities. As part of the settlement, TD Bank will be under 4 years of close monitoring by FinCEN to ensure compliance with the agreement. The U.S. Federal Reserve also imposed fines. This will require TD to relocate its anti-money laundering compliance office to the United States. The OCC has also restricted TD's growth in the U.S., a rare but not unprecedented move. Wells Fargo faced similar restrictions in 2018 for widespread consumer abuses. That bank is still under growth limits. The news took Wall Street by surprise, causing TD Bank's U.S.-listed shares to fall by 6%. Analysts predict that the bank may face higher legal expenses and slower growth in the future. Concerns over drug cartels' use of the U.S. banking system to launder proceeds from the sale of fentanyl and other drugs, which have caused tens of thousands of deaths, have been rising among officials. Couriers tied to the cartels are increasingly opening accounts in U.S. banks, both large and small, to clean their money. In response to the gravity of the situation, some critics, including Senator Elizabeth Warren, believe the penalties against TD Bank were insufficient. Big banks treat government fines as the cost of doing business, Warren said. This settlement lets bad executives off the hook. Last year, TD Bank also paid $1.2 billion to settle allegations of its role in a $7 billion Ponzi scheme led by financier Alan Stanford. The TD Bank denied any wrongdoing in that case. To stay up to date on current events, please like and subscribe to receive future videos.